Assalamualaikum warahmatullahi wabarakatuh. The first, I wanna introduce myself. My name is Siti Solecha. You can call me Echa. I'm college student in Mercu Buana. My faculty is Economic and Business. My majoring is Accountant.
Hello guys. The first, thank you very much for Mr. Budiantoro, their SMA, lecturer of English for Accounting. Now, I want a presentation for major Assigment 2. There are 3 topics. The first topic is balance sheet. What is the balance sheet? Balance sheet is a financial statement that reports a company's assets, liabilities, and shareholders' equity at a specific point in time. The balance sheet is one of the 3 fundamental financial statements and is key to both financial modeling and accounting. The balance sheet displays the company's total asset and how these assets are financed through either debt or equity. It can also be referred to as a statement of net worth or a statement of financial position. The balance sheet is based on the fundamental equation. Asset is liabilities plus equity. That's the formula of asset. A simple of balance sheet. There are 3. 1. Total asset is current asset plus non-current asset. Second is total liabilities is current liabilities plus non-current liabilities. And the last, total shareholders' equity is share capital plus retained earning. The importance of the balance sheet. Therefore, important financial performance metrics include 1. Liquidity. Liquidity is comparing a company's current asset to its current liabilities provide a picture of liquidity. Current assets should be greater than current liabilities so the company can cover its short-term obligation. The current ratio and quick ratio are examples of liquidity financial metrics. 2. Leverage. Leverage is looking at how a company is financed, indicated how much leverage it has, which in turn indicated how much financial risks the company is taking. Comparing debt to equity and debt to total capital are common ways of assessing leverage on the balance sheet. 3. Efficiency. Efficiency is by using the income statement in connection with the balance sheet is possible to assess how efficiently a company uses its assets. For example, dividing revenue by the average total asset produces the asset turnover ratio to indicate how efficiently the company turns assets into revenue. Additionally, the working capital cycle shows how well a company manages its cash in the short term. The last or 4, rates of return. Rates of return is the balance sheet can be used to evaluate how well a company generates returns. For example, dividing net income by shareholders' equity produces return on equity. And dividing net income by total asset produces return on assets. And dividing net income by debt plus equity results in return on invested capital. The next topic is what is tax. Tax is a compulsory financial charge or some other types of levy imposed on a taxpayer. It's an individual or legal entity. by a governmental organization in order to fund government spending and various public expenditures. Taxes also are involuntary fees levied on individuals or corporations and enforced by a government entity, whether local, regional, or national, in order to finance government activities. In economics, tax fall on whoever pays the burden of the tax, whether this is the entity paying tax such as a business or the end consumers of the business good. There are several very common types of tax. First, income tax. It's a percentage of individual earning billed to the federal government. Second is corporate tax. It's a percentage of corporate profits taken as tax by the government to fund federal programs. Third, sales tax. It's tax levied on certain goods and services. The fourth, property tax. It is based on the value of land and property assets. The fifth, tariff. It is tax on imported goods imposed in the aim of strengthening internal business. And the last, or sixth, estate tax. It is rate applied to the fair market value or of property in a person's estate at the time of death. Income tax. Income tax is a type of tax that government imposes on income generated by business and individuals within their jurisdiction. By law, taxpayers must file an income tax return annually to determine their tax obligation. Income tax are a source of revenue for governments. They are used to fund public service, pay government obligation, and provide goods for citizens. The third topic is direct versus indirect costs. It is a picture of direct costs and indirect costs. You can see for direct costs, it is expense that directly go into producing goods or providing service. Their direct labor, direct materials, and manufacturing supplies. And for indirect costs, it's general business expense that keep you operating rent, utilities, general office expense. What are direct and indirect costs? Direct costs are business expense that can be directly applied to producing a specific cost object, like a good service. Cost objects are items that costs are excited to. The example of direct costs include direct labor, direct materials, and manufacturing supplies. The example is like the picture before this. For indirect costs are expenses that apply to more than one business activity. Unlike direct costs, you cannot assign indirect expense to specific cost objects. Example of indirect costs include rent, utilities, general office expense, employee salaries, professional expense, and other overhead costs. Difference between direct and indirect costs. Direct is a simple trick to classifying payments as direct or indirect costs. Is that direct costs encompass the costs involved with creating, developing, and releasing a product. Direct costs include manufacturing supplies, equipment, raw materials, labor costs, and other production costs. For indirect costs, conversely, indirect costs encompass costs not directly related to the development of your business, product, or service. Indirect costs include utilities, office supplies, office technology, marketing campaigns, accounting and payroll service, employee benefit as programs, insurance costs. It is less. As a business owner, knowing the difference between both types of costs is important because one, it helps you have a greater understanding of your product or service, which can lead to more competitive pricing. And the second, you have a better grasp of your accounting and can better plan for the future of your business. Um, Conclusion: direct and indirect costs are accounting concepts that help you separate expenditure that fluctuates relative to how much business you transaction and costs that stay mostly the same, whether you sell an item or 1,000. Direct costs are considered direct because the expenses incurred go directly into the products or service you sell. Indirect costs are indirect because they describe items necessary for running your business but not necessarily for producing your products. And it is conclusion for three topics are: one is the balance sheet. The balance sheet is a very important financial statement for many reasons. It can be looked at on its own and in conjunction with other statements like the income statement and cash flow statement to get a full picture of a company's health. The second is tax is an obligation of all society and the types of direct tax and indirect tax. Taxpayer will be helped especially when making tax payment. When taxpayers know their position and role in the world of taxation, they will be wiser in reporting their tax. The last is direct and indirect costs or expenses. It's important because direct costs can be variable or fixed costs. Variable costs are costs that change based on how many items are produced or how many service offered, and indirect costs can be applied to a specific item. They generally do not change as a result of production volume. And it is for the last module, comparative and superlative adjectives. Comparative adjectives are used to compare two things or people to each other. Example, a bus is bigger than a car. Bill is older than Harry. And superlative adjectives are used to compare one member of a group to the whole group. Example, the Nile is the longest river in the world. And in our class, Maria is the oldest and Charlie is the youngest. Formation of comparative and superlative forms of adjectives. Okay, thanks for watching this presentation.
Okay, as I say, I do apologize for every single mistake. Thank you very much for watching my video. Wassalamualaikum warahmatullahi wabarakatuh.